Health savings account, also known as the HSA. One of the greatest tools in the tax toolbox when it comes to tax planning for not only businesses, but also individuals. That's what we're going to be going over today. Hey guys, Mike again from Ledgerly, partner, CPA, here again to bring you the latest and greatest tax strategies to help you implement to bring that tax liability down and then generational wealth up. Make sure to hit that subscribe button to tune in for weekly videos on the latest and greatest tax strategies for businesses and individuals. So without further ado, let's hop right into the HSA. First thing we want to understand is what is an HSA, and it is exactly what it stands for, a health savings account. It's a triple threat when it comes to tax planning. First threat is the money that you put in is a tax deduction. The second threat is the money that you take out is tax-free if used for medical purposes. The third threat is that it's treated like a retirement account if you don't use it for medical purposes. Think of it as a traditional IRA, if you will. The money that you're putting in is a tax deduction. The money that you take out, you're going to pay tax on if not used for medical purposes. And the beautiful thing about an HSA is that you can self-direct it in whatever investment you would like. Stocks, bonds, mutual funds, self-directing into real estate. So the sky's the limit when it comes to your investment strategy. So let's hop over to the whiteboard. Let's go over a few bullet points when it comes to understanding the HSA. All right, so we're at the whiteboard. Let's go over what it means. The HSA, like we said before, it's a triple threat. So the first thing, number one, saves taxes, meaning you're getting a tax deduction for the money that you're putting in. For 2025, those limits are now, for single, you can put up to $4,300. So it's a $4,300 tax deduction. Or if you're married filing jointly, you can put up to $8,550 and get a tax deduction for that. I'll explain why this is so cool in a little bit. Number two is that it's tax-free. So you're putting in the money, getting a tax deduction, and then you take out the money tax-free for medical purposes. And there's really two ways that you can do this. So when you're paying a doctor's or copay or prescription, you can do it one of two ways. You can either use your debit card. So when you sign up for an HSA, most companies, Fidelity, whatever bank that you're a part of, they'll give you an HSA debit card. So you can either use the debit card or you can take the monies that you're putting in and invest them. That's right. You can invest your HSA. So when you invest it, you're going from cash to non-cash. So this other way that you can use it for medical purposes is just reimburse yourself. And what we mean by that is you can go back in time. If you have a $1,000 receipt from a doctor's or emergency room, you can convert the investment to cash, tax-free, and then reimburse yourself tax-free, as long as you have that $1,000 receipt to match it, okay? The fourth cool thing is that in order to qualify for an HSA plan, it needs to be a high deductible healthcare plan. And with a high deductible healthcare plan, what that usually means is that your insurance premiums are going to be less, but you're going to have copays that are higher. But with that, you use the HSA. And why is this so cool? Because nowadays, not a lot of individuals are itemizing their deductions. And if you guys want to learn more about itemizing, we're going to do another video just like this of going through, it's called Schedule A on your 1040 tax return. What goes into itemizing are three components. Well, there's actually four, but no one really qualifies for medical anymore. So you have medical, you have taxes, like real estate taxes, state income taxes. You have interest on your mortgage and charitable contributions. The medical piece is the killer. Remember number one that we were talking about up here? That you can put $4,300 if you're single, or $8,500 if you're married, and get an automatic tax deduction. For medical, you need at least 7.5% of your adjusted gross income to be medical related in order to start qualifying to itemize those deductions. So for example, let's say your adjusted gross income is $100,000. You need at least $7,501 in order for this first dollar to qualify for medical. So you need over 7.5% in order to qualify. So if you spent $7,501 in medical, only that $1 will count. But if you're married, why wouldn't you just want to have the guaranteed tax deduction of $8,500? Or if you're single, the guaranteed tax deduction of $4,300. That's the great thing about the HSA. You're getting an automatic tax deduction rather than, okay, crap, how much did I spend in medical this year? It doesn't matter. With the HSA, that totally supersedes Schedule A. which is why it's such a powerhouse strategy. We freaking love it here at Ledgerly. And you know what? Let me give one more. Number 6, the HSA gives you control. That control meaning, are you going to use it for medical right now, or are you going to invest right now? And here's a big frequently asked question for the HSA. I can't believe I'm saying this for last, but I really hope you're still listening, because an HSA does not equal FSA, a flexible spending account. There's a lot of confusion on this. An HSA, this is your money forever. An FSA is a use it or lose it plan. The HSA is not a use it or lose it plan. It's your money forever. All right, a lot of great stuff here on the HSA, but let's take a couple steps back, rewind it, and recap the HSA. The HSA gives you the tools to control your financial freedom, whether it's saving for healthcare expenses, cutting down on your taxable income, and or creating that other investment vehicle as a triple threat. And as long as you have that high deductible healthcare plan, you're eligible for an HSA, you're ready to rock. So if you love this HSA strategy, or you love all these other great strategies that we're teaching here, hit the subscribe button, go to the website, book a call. Let's get the ball rolling on all these great strategy tips to help integrate into your personal picture, your business picture, or a mix of both, and truly make your tax picture a triple threat.